I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. They don't start big, but we're beginning to see deals, important ones, and they aren't getting enough attention from the market or from the media, for that matter. If anything, on the eve of the unofficial start to earnings season, they're being dismissed, and that's just plain stupid. I even saw a downgrade today of Goldman Sachs, the principal deal house, and I almost have to laugh about how wrong-headed that is. Sell. Oh, and let's not forget, these mergers aren't just good news for the investment banks. They're good news for the entire stock market, which may be sensing something because we started the day down big and then rebounded with the Dow closing up 88 points. This will be advancing 0.14%, and the Nasdaq gaining 0.27%. You know what? It's actually a stupendous comeback, especially in light of some of the incredibly aggressive, some would say negative, tariff news from the president this weekend. Everywhere I went, people said, oh, boy, I guess the market's going to be down big on Monday. I said, no, not so fast. Regular viewers know that I think we have two markets here. Big institutional investors, they've generally been selling, but individual investors have been buying stocks hand over fist. I don't think they seem to care about the tariffs. They know that everybody sold after the Liberation Day announcements, and anyone who did, it turned out to be a big mistake. They missed a big move. But don't be so short-sighted. We're seeing the beginnings of an M&A boom here, even as it may not feel like it, because often the deals seem, well, dowdy or, let's say, not clear yet or in the future. I mean, you could have seen Kraft Heinz. It's reportedly breaking up soon. People are yawning. So what? They're saying big deal. I say, no, that is dead wrong. The company said to be planning to keep its faster-growing brands, like maybe Heinz Ketchup, a lot of new derivatives there, Kraft Mac and Cheese, Philadelphia Cream Cheese, while separating the brands with the slowest growth, like Oscar Mayer Packaged Foods, Velveeta Cheese. The deal putting Heinz and Kraft together sounded like a match made in heaven in 2015. How could it fail? Great name brands, orchestrated by Warren Buffett and the brilliant people from 3G Capital, the uber-successful Brazilian private equity firm. It felt like the center of the store blockbuster. But then people stopped going to the center aisles at the supermarket, and that spelled trouble for Oscar Mayer, for Jell-O, for Miracle Whip, for Maxwell's, for Velveeta, which apparently can survive thermonuclear war, and Cheese Whiz, of Whiz Wit fame, if you go to Geno's in Philly, which remains my go-to place when I head to the city of brotherly love. Here's what's amazing, though. People now think these brands have no value. But you know what? That's what they said about W.K. Kellogg, the cereal business, when it split with Kellanova, the fast-growing part of the Kellogg family, which, of course, got a bid. Until the cereal acquirer couldn't resist, C-E-R-E-A-L-N, yes, S-E-R-I-A-L, cereal acquirer Ferraro stepped up and paid $3.1 billion for the maker of Fruit Loops and Corn Flakes. That was some deal last week. It was amazing. Sure, it's supposed to be a nightmare in a world where Health and Human Services Secretary RFK Jr. is on a crusade against food coloring. But it was a dream come true for Ferraro, which has spent $13 billion in 10 years to expand around the globe. They don't want to be just a small Italian company. My feeling is that if Giovanni Ferraro sees value in Fruit Loops, he might see some value in some of the Kraft Heinz brands, too. Or consider Kenvue. 2 years ago, this company was spun off by Johnson & Johnson, which wanted to unload its fantastic consumer business. Think like Tylenol, Neutrogena, Listerine, Aveeno, Sudafed, Pepcid, Band-Aids, Zyrtec, and so many others all under one roof. The company picked this fellow, Thibaut Mongon. He was the leader of J&J's Consumer Health Division, to run it. We learned today that he was sacked after activist pressure, and Kirk Perry, a current director, was named interim CEO. Kenvue also announced a strategic review of its brand stable. That's what we're hoping will happen at Kraft Heinz. Is this shocking? Was it amazing that Kenvue already got rid of the CEO in 2 years? Well, yes, if you saw the numbers. Kenvue reported minus 4% organic growth when Wall Street was expecting plus 2 to 4%. But I bring this up because more deals are coming in that space. Any one of the majors would be thrilled to snap up some of these brands because there's very little organic growth in the industry. The only way you can have any growth is buy it. All right, now how about this merger today between Becton Dickinson, this was the life science and diagnostic division, which had been shopped extensively, and Waters, a really strong company. We've had them on, a dominant player in exactly those fields. The deal was done in a very confusing reverse Morris Trust way, which is one of those tax-saving situations that the street almost always hates, but the CEOs think is so smart. And they hate it because they aren't easy. They're not clean. The merger was greeted with horrors for Waters, which saw its stock plunge 13.5%. That's part of the greeting. It shouldn't have been down that much, but people didn't understand it. Becton Dickinson's getting a 39.2% stake in the newly combined Waters, yet after selling off this morning, its stock actually finished in the black. Seemed like a great deal to me, especially because the company got $4 billion in cash and assumed $4 billion in debt. Really good deal for Becton Dickinson. But again, it's hard to get your head around, so it didn't bring out many buyers, at least not today. Believe me, that will change, and people say that not everyone lost. Oh, by the way, big winners included Barclays, which represented Waters, and Citi worked with Becton Dickinson in a $17 billion transaction. They made out like bandits. Or how about one of tonight's guests, Huntington Bancshares, which announced today it was buying Veritex. I thought it was a tech company. No, it's a Dallas-based bank for $1.9 billion. I know, not huge, but it puts Huntington in the queue to shed its regional status, become much more of a national bank, at least in the parts of the nation that are good for business. CEO Steve Steinhauer says that Veritex will help his Ohio-based bank move into a number of cities in Texas, which is one of the great growth states in the union. I think this is the kind of deal we'll start to see more and more of now that we have a new banking regulatory regimen and antitrust authorities that won't reflexively block acquisitions. We'll talk to Steve Steiner later in the show about how this acquisition fits into Huntington's aggressive long-term plans. In the end, what matters is that deals are getting done, even if they're sometimes being done at prices that people don't like the Waters deal. I'm extremely confident that someone will want some of Kenvue, if not all of Kenvue, because those brands grow slowly. But if you put a bunch of them together, you might have something that Wall Street gets very excited about. And again, it's not just about the takeover targets. These M&A deals are incredibly lucrative for the banks that orchestrate them. The results won't necessarily be seen this quarter. So I can see why Citizens JMP, a brokerage house, might take Goldman Sachs from buy to hold. Goldman reports Wednesday, and you won't see the bump in numbers from the deal market yet. However, these heart of July deals are a terrific harbinger for the fall. You don't usually get a lot of deals during the summer. And I don't think it makes sense to sell Goldman here and then try to get back in it later. Good luck. Even if they miss the quarter on Wednesday, it's not going to stay down for long. I'm clearly not alone, as the stock actually rallied more than $8 today despite this downgrade. Here's the bottom line. You don't get a wave of deals out of nowhere. You get a ripple and then ever bigger waves. Right now, we're in the ripple stage. That's when it's best to do some buying. By the way, even if you think brands like Maxwell House and Visine and Corn Pops died years ago, don't worry about it. They may not be exciting to you, but there are plenty of potential buyers who are excited about that. We'd be happy to snap them up, and the regulators are no longer blocking every M&A deal under the sun. As we head into the bank earnings tomorrow, don't think about the past with Washington leaning against every deal. Think about the future, where it looks like the government is encouraging deals and is no mood to get in the way of capitalism, at least the way we used to know it. Let's go to Rick in Oklahoma. Rick.
Booyah, Jim.
Booyah, Rick. What's up?
Been a club member for about 2 years.
Oh, excellent. Hello?
First-time caller, and thanks for all you do.
Oh, thank you. It's been a tough, just working around the clock right now, it seems, but I'm glad you liked it. Thank you so much. How can I help you?
Have a very, very fast shout-out to the OKC Thunder for winning the NBA championship.
Absolutely. They did a good job. Okay.
I have a few hundred shares of Wynn stock with the company.
Oh, I think Wynn. We were at Wynn earlier this year, and I was very worried about China. I still am, but they've got a good thing going. Craig Billings is such a good manager. He's actually terrific, and I'm glad to see that stock is finally starting to move. It's still very inexpensive on a PE basis. How about we go to Jay in Washington? Jay.
Hey, Jimbo, how's it going?
Not bad, Jay. How about you?
I'm doing excellent. Thank you. Hey, I'm a longtime listener and Charter Club member. Thanks for helping me retire early.
There you go. That's, as I told Casey Sullivan, our boss, we are changing people's lives. It's different from compensation that you're used to with dollars. It's a different kind of compensation. I like it more. How can I help you?
I used to work hard for my money. Now my money's working hard for me. In January, I started building a large position in this best-of-breed company. Now I'm in the house of pain. I agree that it doesn't matter where stock's been. It's about where it's going. Right. And I don't think this company is going to meet earnings expectations later this month and will keep falling. Anyway, I want to sell half my position now and the rest into any strength before earnings. Maybe invest the proceeds in one of my growth stocks.
Okay.
This stock's flatlined and looks like dead money. What are your thoughts on United Health?
You know what? United Health is very, very tricky, and it might be a long-term turn. But I will tell you this, Steve Hemsley is the only person I know who could possibly turn this thing around. Hemsley's back as CEO. He was amazing. I think you have to have fortitude to be in it. I don't like the situation because there's so many winners, as you say. But at least I want people to know that I think Hemsley's the real deal. All right, look, you don't get a wave of deals out of nowhere. And now we're starting to see something happen. I think it's a sign that you got to do some buying. Look at the dip today. It was such a great opportunity. Again, Mad Money tonight. It's 1 year since CrowdStrike's outage took down millions of PCs worldwide. And I'm sitting down with the company's bankable CEO to dig into their incredible recovery efforts. Then Zimmer Biomet announced an acquisition this morning that will strengthen its robotic surgery portfolio. I mentioned a couple of acquisitions, not this one, too small, but I'm hearing about robots in the future and what they're going to do because that company's not growing fast enough, and I think this might accelerate it. And it's deal season. As I've said, Huntington Bankshares is snapping up Texas-based Veritex. What does it mean for the Lone Star State? What does it mean for the Buckeye State? What's it mean for your money? I'm going one-on-one with Huntington's top brass to break it all down, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.